What are the RMD, rules for inherited for 101Ks? Have you ever wondered what happens to a 401 degrees Kelvin account when someone passes away? Understanding the rules for inherited for 101 degrees Kelvin accounts is essential for both retirement and estate planning. Let's break down the key points you need to know about required minimum distributions, or RMDs, for inherited for 101 degrees Kelvin accounts. First, RMDs are the amounts that must be withdrawn from retirement accounts each year. The rules for inherited for 101 degrees Kelvin accounts change significantly with the setting every community up for Retirement Enhancement Act of 2019. Before this act, beneficiaries could stretch distributions over their lifetime. Now, most beneficiaries must withdraw the entire account within 10 years of the original owner's death. This brings us to the 10-year rule. Most beneficiaries must distribute the entire inherited for 101 degrees Kelvin account within 10 years. While there is no requirement to take distributions during the first 9 years, the account must be fully distributed by the end of the 10th year. However, there are exceptions to this 10-year rule. Certain beneficiaries, such as spouses, minor children, and individuals who are disabled or chronically ill, may have different options. For instance, a spouse can treat the inherited for 101 degrees Kelvin as their own. This allows them to delay distributions until they reach 73 years old. Now, regarding annual distributions, while the 10-year rule applies to most beneficiaries, taking annual distributions is not mandatory unless the beneficiary decides to do so. If the original account owner was already taking RMDs, the beneficiary must continue to take distributions based on the original owner's schedule for the year of death. It is also important to note the tax implications. All distributions from an inherited for 101 degrees Kelvin are taxed as ordinary income. Beneficiaries should keep this in mind when planning their withdrawals to minimize tax liabilities. When considering estate planning, understanding these rules is vital. Beneficiaries should be aware of the RMD rules to ensure compliance with tax regulations and to manage their inheritance effectively. By grasping these key points about RMDs for inherited for 101 degrees Kelvin accounts, individuals can better plan for retirement and ensure their beneficiaries are prepared to handle inherited retirement accounts.